Greetings from New York City. This is Chris Franco. You are tuned in to CMQ Investing. Please subscribe if you haven't already. There will be many more updates that you will not want to miss. And if you're interested in building long-term wealth, that's what we're all about here. Doing things that are proven to work, that are reliable, that are backed by empirical evidence, academic research, and the lessons of legendary investors, as well as our own experiences. So Cathie Wood was on CNBC a few weeks back, and she was discussing her fund's price prediction for Tesla.
And Cathie Wood joins us now exclusively. Cathie, it's so great to have you on the show. Thanks for being with us.
Thank you, Morgan. Happy to be here.
So much to discuss with you, but I do want to start with Tesla.
The price target for our stock, and I think it's just hitting now.
Here comes the big reveal.
For 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case. Now, just Morgan, on the regular...
I love how the bear case is $1,400, but then the co-host jumps in here.
Cathie, hold on. Good afternoon. Yes. It's John Ford. I just want to clarify. Did you say a $2,000?
This guy's like having
$1,000 per share price target? Tesla right now is under $200 a share. So yes. Even if you were to 10x that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think believe that the robo-taxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030 and is one of the most important investment opportunities of our lifetimes.
Okay.
And I think one of the reasons for that is it is going to save lives. 80 to 90% of auto fatalities and auto accidents are caused by human error. And autonomous driving is going to take away the human error, we believe.
I didn't even realize she put a "we believe" at the end there. That's awesome.
We believe. We believe. Can you believe? We believe. We believe. We believe. We believe. We believe. We believe. I usually don't believe it. We believe. We believe. We believe. We believe. We also believe. We believe. We believe. We believe. I believe.
We don't believe you, Cathie Wood.
We believe. So let's bring up a couple points, then I'm going to go and show you my sort of full analysis here and relate this back to something I learned from Warren Buffett that I think you'll find to be very, very usable. At least it has been for me. The robo-taxi, whatever you want to call it, the fleet, that is a huge opportunity. There's a enormous total addressable market there. So Cathie Wood is not crazy for saying, that aiming in that direction could lead to, incredible results. The thing that I think is often lost on us because our brains want to jump at the hot new thing, it's this psychology of investing, is that in order for Tesla, Tesla's not the only company that's going to go after this opportunity. And for them to capture, enough of it to be the number one or number two, a lot has to go right. And it doesn't mean that they can't do it or I'm doubting Tesla, but that's what we have to think about. What is the probability that Tesla captures whatever amount of market share that's required in order to have the valuation of $5 trillion that Cathie Wood is claiming that if her price prediction of $2,000 per share is correct in 2027, that's what the market cap would be. Now, there's a really useful model from the world of mathematics. I almost said that. I was trying to think of another word as I said mathematics. But in probability, there's this idea of base rate. And the base rate fallacy is this notion that we tend to ignore the prior probabilities when assessing how likely something is going to happen or not. So the idea that Tesla will reach a $5 trillion valuation, it's, first of all, totally possible. I'm not rooting against Tesla. But currently, among US-based publicly traded companies, there's only one company that's in the ballpark of that, and that's Apple, which is hovering around $3 trillion market cap. So Tesla would need to, not only, achieve whatever it is that go to that 5 trillion amount, but go to a number that no U.S. company has ever gone to before. Now, someone has to do it, right? But just that's something to consider in terms of the prior probabilities. The second is, and I don't have this in front of me, but what are the odds that Tesla can continue growing and I'm using share price as the example, even though that doesn't reflect the business itself, or at least not in real term or in real time. But what is the likelihood that Tesla, who's had or the company that's had this incredible run for investors over the last, let's call it 5 years, that the next 5 years are like on that same level? It's possible, but reversion to the mean, these other ideas from statistics would probably lead me to believe that it's most likely, not highly probable. And I don't mean to hedge, but let me get to what I wrote about this, and I'll bring it back to the Warren Buffett quote before I talk you guys to death. So for those of you who don't know, I have kind of how this all started during COVID, as I had the Charlie Munger quotes page on Instagram. Someone was asking for more of an explanation, so I created a Substack. I wanted to create a brand that was different than just, I wasn't trying to go off Charlie Munger or his name and likeness. So I created something called CMQ, or Compound Money Quietly. And I have this Substack, which you can subscribe to for free. I'm going to be building out the paid side of it more. I've got a lot of content on deck, but this was something that if you're a free subscriber, and you can get that just by signing up with your email, you would see this. So let me share my screen here so you guys can see what I'm looking at. So this news, or Cathie Wood's price prediction, which, by the way, that's kind of her whole shtick. If you go back in time, that's how Cathie Wood started getting headlines. She made very bold predictions about Tesla, among other companies, but Tesla was the big one. But not to get too caught up in that, Warren Buffett said that if you let's just take a company that has marvelous prospects, let's say like Tesla, that's paying you nothing now, where you buy it at a valuation of $500 billion. Tesla's market cap as of today, May 17th, 2023, is $522 billion. So that's actually pretty helpful. So let's assume that there's only going to be a 1-year delay before the business starts paying out to you, and you want to get a 10% return every year. So if you paid $500 billion, then $55 billion in cash is the amount that it's going to have to be able to disgorge to you, or spit out at you, year after year after year. To do that, it has to make perhaps $80 billion or close to it pre-tax. Now, the tax rates were different when this quote initially came out, but just keep that in mind. If you look around at the universe of businesses in this world and see how many are earning $80 billion pre-tax, or $70 billion, or $60 billion, or $50 billion, or $40 billion, or even $30 billion, you won't find any. Anytime you get involved in these things where if you trace out the mathematics of it, you bump into absurdities, then you better change your expectations somewhat. So the idea here is, and this is why I want to bring it back. Let's imagine, fast forward. I don't want to, speculate whether or not Tesla will reach this valuation. I think that's a whole nother conversation. But what's more interesting here is, let's say it does, its market cap is $5 trillion in 2027. This brings up an important question, which is, under what circumstances, if you're going to be an investor who thinks like a business person, and that's the name of the game, under what conditions does it make sense to buy Tesla for $5 trillion? So using that example from Warren Buffett, and this is not perfect math, but direction is better than perfection in this case, you would need pre-tax income of about $630 billion. However, no publicly traded businesses currently earn more than $630 billion pre-tax. And again, this is just to get the $500 billion in cash each year on average, without reinvesting it back in the company. Tesla's annual net income for 2022 was $12.6 billion, which is far from the required $630 billion. To reach Cathie Wood's price target, Tesla would have to continue expanding its market share for EVs, improve profit margins, and mind you, Cathie Wood was responding to the fact that Tesla's operating margins were down, successfully launch new products and services like the robo-taxi fleet, seize the global robo-taxi opportunity, and all the while keep competitors at bay. While these goals are possible, as investors, we have to focus on, or we should focus on, high probability events. Those are the kinds of businesses that we want to invest in. There's no certainty in investing, only probabilities. So you want something that's, you believe, has a high probability of working out. Ideally, and then the rest of the market doesn't agree with you. That's when you really can find usually a price advantage. So Tesla has already overcome significant hurdles to reach its current position. And I have a great deal of respect for Elon Musk and the Tesla team for doing their part to make it happen. And although Tesla's achievements are impressive, and they really are, and Cathie Wood's enthusiasm is appreciated, we have to be rational. A $2,000 share price prediction implies significant growth in net income and cash generation, which would require nearly perfect conditions and execution. And yesterday during the Tesla investor meeting, Elon Musk talked about the macroeconomic conditions, and they're facing a lot of headwinds right now. It's important to remember that competition is also increasing, and Tesla's technological edge may not be as sustainable as it appears today. Several models cast doubt on Tesla's chances to reach Wood's predicted valuation by 2027. For instance, a company experiencing rapid earnings growth may revert to the mean, and some of Tesla's success may be due to randomness. And by the way, that's one of the big ideas from probability theory, which is that randomness is real. Additionally, changing market conditions can impact Tesla's trajectory. As I remind people on my team, when we're talking about machine learning models, if the conditions change, everything changes. So to achieve Cathie Wood's predicted valuation, Tesla would need near perfect execution of its business plan, which is not guaranteed. So I said we should heed Warren Buffett's advice, be rational and objective when making investment decisions. And one way you can do this is by avoiding mathematical absurdities. Now, let me know in the comments if you think Cathie Wood, what she said is a mathematical absurdity. You may disagree. And again, this is not a place where, we're like screaming at each other. This is a place where we're trying to be objective and be as rational as we can. But just know I appreciate you for tuning in. I hope you'll subscribe. Hope you'll like the video. Let me know what you think in the comments. I'll put links in the description if you want to check out the newsletter. There's also the CMQ Investing podcast, which was in the top 1% of most shared globally and most followed globally across all podcasts, not just investing, on Spotify in 2022. So I will put links to that as well. And I'm back. CMQ is back. Compound Money Quietly. Appreciate all of you. And hopefully we'll talk soon. Later.